Thank you very much, Larry. And as usual on PM Live at this hour is our business roundtable, where we discuss issues of strategy, issues of the economy. And one of the most important parts of the economy is obviously housing. That's why we've been asking the question that I've been asking, whether owning a home is an important thing. Because our guest today is one that should be familiar to quite a lot of us. That's Frank Ireri, the Managing Director of Housing Finance. You're not a new face to television, you're not a new face to anyone. And I guess for me, where I want to start is because you announced your numbers last week. And again, it's a huge growth. I think it was 60% up from where it was the year before. Yeah. What's behind those numbers?
I think what we're seeing behind it has been the evolvement of our strategy. A strategy that we rolled out in 2007, a 5-year strategy that actually comes to an end this year. A strategy that is built on supply, so focusing on the supply end of the market through our property finance business unit that we set up. A strategy that's based on property sales through our property point. And then a strategy that's based in terms of our mortgage market and in terms of creating new markets, and especially in terms of the diaspora and the SME. So what we've seen translating, and ever since we launched the strategy, we've actually been growing anywhere between 50 to 80% per year based on that. So really it's around business growth, both on financing projects and financing the end buyers.
Something occurs to me that when you have 50 to 80% growth leading to 60% growth in profits, there's a certain level of pent-up demand in this market. Is it because people are afraid of mortgages? Is it because the mortgage market wasn't as developed as it should be? What's behind that sort of gap between what should be and what is?
Great. I think for us, the issues are historical. And what we're witnessing today is a result of things that didn't happen in the past that should have happened. We also have seen an emerging middle class, especially from 2002, 2003, and with that has come also more demand for housing. We've also seen now more and more financial institutions going into mortgage lending, and even the Banking Act being changed to allow them even to lend more. So those are just some of the few reasons why we're seeing this pent-up demand, as it were. But also, again, we do have still the challenge of supply, because supply lags, and housing is a long-term business. It takes you at least 2 to 3 years in some cases to put up a housing estate, a block of flats, etc. So there is that lag also in terms of supply.
I'll get into the sort of the broader mortgage and housing market in the country, because it's an important one. And in fact, that may be the reason why a lot of people are watching this, because there's also philosophical issues and economic issues behind it. But sticking with HF particularly, you're in the dedicated mortgage market, you're a mortgage financier.
True.
Any interest in getting into commercial banking, which looks like it's, again, growing at a remarkable level? There's a lot of unbanked people. There's all sorts of innovations with mobile banking and the rest. Is that an area of interest to you?
No, it's actually something that we have debated as a board and as a senior management team over the years. And we are clear that there is a need and there is room for a dedicated mortgage finance player. When we look at our strategic strengths, really it does play within the mortgage finance, or even broader within the property finance space. So it is our intention to remain a mortgage finance company.
Any chance perhaps, and here's me trying to be a board member, of establishing a different unit that handles commercial banking while returning sort of a core HF to do what it is that you do currently?
We can't rule it out. I mean, we're actually beginning now our thinking for 2012, 2016, our next 5-year plan. And with it also be looking at our evolving business model. Because even though we are a mortgage finance player, we are now allowed to operate current accounts. And we will be rolling those out later in the year. So we'll also be looking at our evolving business model. But still, for us, is really to maintain that distinctiveness, that uniqueness in the market.
And in terms of the fact that lots of commercial banks now have gotten into your space, any plans perhaps to do acquisitions or to be acquired? I mean, always being acquired is always a worst option, because it gets subsumed into someone else's business model. But anything like that in the horizon?
Yes, there is, and I won't be able to specifically talk about those at the moment, but definitely within that that next 5-year horizon that we're looking at, we are looking at some potential acquisitions or partnerships to actually help us get to the level that we're looking towards.
Now, let's now get to the meat of the question. Mortgages, home ownership in Kenya, which I think it was a World Bank report that was saying something in the region of 12 to 15,000 in a population of 38 million.
18,000 mortgages,
It's ridiculously low. For a country such as ours, with our level of development, our level of if you may call it financial sophistication, one would expect that it should be a lot higher. What is behind that low figure?
No, it's very true, and even the report did come up with some very interesting findings. And one that they talked about was access to long-term funds, especially affordable long-term funds,
yes,
in terms of the financiers. Two, of course, is also our GDP. And again, our GDP is still pretty low, so in terms of affordability. The third issue, of course, has also been the issue of supply. And that's where you have the
supply of the housing units themselves.
The supply of the housing units itself. There was a very long period in the last 10, 15 years when there was very little supply of housing taking place across the country. Now it's only when it's picking up. You also had issues where then very few finance companies were actually offering mortgages. You really had only two key players in terms of housing finance and savings and loan. So those are just some of the reasons why we're seeing such a low take-up in mortgages, and it represents only 2.5% of our GDP, which is very low. If you compare to South Africa, it's 30% plus. But the good news is that it is growing, and from the survey that was done, it is growing quite drastically. And from what we see from central bank monthly statistics, lending to the real estate sector by the total banking fraternity had gone up 90% year on year as of November last year, against an average.
Again, it's something to do with pent-up demand more than a
bubble. It's pent-up demand. It's also more people understanding the area and wanting to go into it. There's more incentivization for developers to go and develop. There's the growing middle class. So it all comes together. Because
that conversation, at least that part of the conversation, would bring so many questions to my mind, including anecdotally, the people that I know, people who are around my age, slightly younger, slightly older, the percentage of people who have mortgages that you would expect, people who have regular jobs, is a lot lower than it should be. A lot of us are still renting, including myself. There's what you're speaking about before you came on air, which is a